The main driving factor for oil prices was not Russia's decision to switch to ruble payments for natural gas supplies to the so-called hostile states, but a possible EU embargo on Russian oil. Let's discuss this topic in more detail in our video review on InstaForex TV channel. Before his trip to Europe, US President Joe Biden promised to press for Western unity and tougher sanctions against Russia. Of course, market participants feared that the head of the United States would try to persuade European allies to place an embargo on Russia. However, the new restrictions targeted only individuals, so it's not surprising that oil prices fell below $120 per barrel again. However, Russia's decision to seek payment in rubles for gas sales has a long-term implication. Investors are concerned that in the near future it will affect not only unfriendly states but also all buyers of Russian gas. Moreover, the same measure may be taken with regard to oil, and this will finally destroy the established pricing system and lead to chaos in markets. Such a prospect itself is a precondition for rising energy prices. According to the chart, a slight pullback in Brent crude oil futures failed to break an uptrend. Market sentiment is still bullish. The main focus of speculators remains on fundamental factors which continue to shape market trends. From a technical point of view, if the price consolidates above $124, Brent crude will most likely gain strong upside momentum. Although the European Union again refused to impose an embargo on Russian energy supplies, gold continued to gain value. The value of the yellow metal has already risen above $1,950 per 3 ounce. At the same time, global risks seem to have decreased somewhat, and this in turn should have damped demand for safe haven assets. Apparently, higher gold prices are due to Russia's announcement that it will now demand ruble payments for natural gas purchases. Investors fear that the system that forms prices not only for energy products but for all commodities could collapse. Besides, they worry that this could affect global trade. Under such conditions, gold is considered one of the safest trading instruments. Thus, after several days of stagnation in the range between the levels of $1,917 and $1,950, the precious metal managed to overcome its upper boundary. The breakout was accompanied by a high speculative interest, which helped the asset gain 1.5%. Now, gold's rally has paused due to its local overbought status, but market sentiment is still bullish. If the metal keeps rising, the level of $2,000 can be seen as the next target. The Russian currency seems to have finally consolidated below the mark of 100 rubles per dollar. However, there are no signs of its further gains yet. Notably, the European Union again refused to place an embargo on Russian energy supplies. At the same time, EU leaders projected Vladimir Putin's demand to pay for natural gas in rubles. European Commission President Ursula von der Leyen said the move was an attempt to circumvent EU sanctions against Russia, so the issue remains to be resolved, which caused uncertainty in the market. It turns out that there are no factors that could drag the ruble down, since the imposed sanctions have targeted only individuals. Yet it's too risky for the ruble to advance, as it's not clear how this whole thing is going to end. That's why the ruble has got stuck in the range from 95 to 100 rubles per dollar. And this is all for now. We continue to learn developments on financial market. Subscribe to our channel and follow news with us. See you soon.